Hello friends, I am Kamakshi Khandelwal. I welcome you all to my next session in my webinar series. My topic for today's deliberation is transitional provisions. With the Finance Minister announcing the schedule of GST rate for goods and services chapter wise and SEC code wise in its 14th Council GST meeting held on 18th and 19th of May 2017. One of the biggest tax reforms in India, that is GST, is soon going to see the light of the day on July 1, 2017, under which majority of the indirect taxes like excise, service tax, VAT, etc. are going to be subsumed under one basket. The CGST bill, UTGST bill, IGST bill, compensation cess bill have both passed by the Lok Sabha and the Rajya Sabha and have also received the President's assent on 13th of April 2017. So now the CGST bill, UTGST bill, IGST bill and the compensation cess bill are now CGST Act, IGST Act, UTGST Act and Compensation Act. Now one of the biggest question is the industry ready for migration from the existing law to the new law? The main concerns before the industry is what will happen to their unutilized SENVET credit, their pending refund claims, what will happen to the stock kept in their warehouses, the goods sent to the job worker, what will happen to all these transactions. They lay down the blueprint for dealing with the ongoing transactions, contracts, etc. whilst the new law gets enacted. The transitional provisions are defined from sections 139 to 142 in chapter 10 of the CGST Act, in section 20 of the IGST Act, in section 17 to 20 of chapter 8 of the UTGST Act, and again section 139 to 142 of the SGST Act. Today we will be discussing sections 139 to 142 of the CGST Act. So let's start. First is the migration of the existing taxpayers. This topic I have already covered in detail in my webcast on registration in GST. So I'm not touching it up here. Just to brief you, every person registered under the existing law having a valid PAN shall be granted a certificate on the provisional basis. Currently, the enrollment window is closed as of now, but the enrollment window will reopen from June 1, 2017 for taxpayers who could not enroll themselves and as well as for those who enrolled but could not sign the enrollment form. Now, coming over to the next issue. The next big issue is the carry forward of credits. What will happen to my unutilized SENVET credits? First section, section 140 subsection 1, credit carried forward in a return other than for a service provider having centralized registration and a trader having credits due to sales against statutory forms. In this case, a registered person other than a composition dealer referred to in section 10 shall be entitled to carry forward the credits reflected in the return filed for the period immediately preceding the appointed day. What are the conditions for the carry forward? First, input tax credit should be available in GST. Returns for 6 months immediately preceding the appointed day have been filed and the credit does not relate to exempted goods. If all these three conditions are satisfied, then the registered dealer will be able to carry forward his credits reflected in the last filed return. Now, what credits can be carried forward? Credits relating to central laws such as excise duty, service tax, CVD shall be carried forward as CGST credit, and credit relating to state laws such as VAT, entry tax, purchase tax shall be carried forward as SGST credit. For example, a person was registered under Central Excise, Service Tax and Sales Tax and had credit carry forward of rupees 10,000, 25,000 and 50,000 respectively. Now, how will these amount be credit forward in the GST? Credit carry forward in Central Excise of rupees 10,000 will become CGST credit. Credit carried forward of Service Tax of rupees 25,000 will also become CGST credit. Credit carried forward in Sales Tax of rupees 50,000 will become SGST credit. So simple. Now next question that arises it, supposingly if a dealer is dealing in sugar as well as alcoholic liquor for human consumption, sugar is chargeable to tax and GST while alcoholic liquor for human consumption is outside the purview of GST. He has a credit carried forward of 5 lakh. Now my question is, can this credit be carried forward? If yes, how much? Question for carry forward of credit, what is the condition? Credit, since the credit must be admissible as input tax credit under GST. Now since alcoholic liquor is outside the purview of GST, so credit is not admissible as input tax credit under GST. Now another question pops up is, I have this consolidated credit carried forward of rupees 5 lakh. Then how can I carry forward this balance? Is there any option available? Since if the assessee is able to segregate the amount of credit related to sugar and the amount of credit related to alcoholic liquor, then he can carry forward the credit relating to sugar only. If the dealer is not able to segregate the amount of credit relating to sugar and alcoholic liquor, then I'm sorry, he cannot carry forward this credit. It will be a loss for him. Coming over to the next provision. Credit carried forward in a return for a trader having credit relating to sales against statutory forms. Section 140 subsection 1 of the SGST Act. Credit relating to transactions covered in Section 3, Section 5 subsection 3, Section 6, Section 6A of the CST Act. Sales against statutory forms such as C form, F form, E form, H form, I form shall be allowed only when the claim is substantiated in the manner as provided in Rule 12 of the CST rules. That is, the forms should be submitted. If the claim is not substantiated, that is, the forms are not submitted, then the credits will be refunded under the earlier law as and when the claim is substantiated. The manner of calculation of credit that can be carried forward in this provision would be prescribed. Now let us understand this provision with the help of an example. For example, a supplier has a total ITC balance as per the last VAT return as rupees 10,000. Out of that, input credit attributable to the value of claims under Section 3 or subsection 5 subsection 3, 6, 6A of the CST Act is rupees 5,000. Now, out of that, input credit attributable to the value of declarations received in Form C, F, E, H, I specified in Rule 12 of the CST is suppose 3,000. So, input tax attributable to the value of claim for which the declarations are pending as on the appointed day, that is rupees 2,000, will be disallowed. This 2,000 will be refunded as and when the forms are submitted. Therefore, the total ITC allowed to be carried forward as per the provisions is rupees 8,000. I hope I am clear. Now, moving over to the next provision. So, what is the last date to file the GST TRAN-1, what is the last date? All these credits etc. are to be filed by making an application in form GST TRAN-1. So what is the last date by which we have to file our GST TRAN-1? As per law, it is 60 days from the appointed date. So that means if GST is implemented from July 1, then I have to prepare and file my GST TRAN-1 latest by 31st August 2017 in order to carry forward my tax credits belonging to the earlier law. Now what is the due date for discharging my first GST liability? It is 20th August 2017. That means we must file our GST TRAN-1 latest by 15th August 2017 so that we can fully utilize the credit pertaining to earlier laws for discharging the tax liability of GST. Unless we would have to discharge our entire first month liability by cash despite huge credit balance available to us in the earlier laws. So what preparedness we need to do? First, we must carefully file our last return so that all the credit eligible is duly reflected in our return. Second, start collecting C form, F form, H form, etc. so that maximum VAT balance can be carried forward. Else we all know how difficult it is to claim refund from the department. Third, maintain the list of C form, F form, etc. detailing therein the serial number of the form and the value of declaration against each form type. Now coming over to the next provision, section 140 subsection 2, carry forward of unavailed Senvet credit on capital goods. An assessee can also take the credit of unavailed Senvet credit on capital goods. Now what is unavailed credit on capital goods? Unavailed Senvet credit means the total eligible Senvet credit minus the credit already availed. So what are the conditions for claiming this type of credit? The assessee should not be paying tax under the composition levy. Second, the credit should be admissible as ITC under GST. So while filing GST TRAN-1, an assessee shall specify separately the amount of tax or duty availed or utilized and yet to be availed or utilized for every item of capital goods. Let us understand this provision with the help of an example. A manufacturer purchased a capital goods worth 1,25,000 including excise duty of rupees 1,25,000 on 5th of May 2017. So in the financial year 17-18, he could only avail Senvet credit to the extent of 50%, that is 62,500. Now the balance Senvet credit of rupees 62,500, he can carry forward this credit as CGST credit under the GST regime. For this, he has to specify the amount of tax or duty availed or yet to be availed separately for every item of capital goods. Now next provision. This is the most important provision. Availability of new credits. Credit of inputs held in stock on the appointed day. This section is applicable to unregistered person under existing law, manufacturer of exempted goods, provider of exempted services, provider of works contract service and availing benefit of notification number 26/2012 service tax, first stage dealer, second stage dealer, registered importer, depot of a manufacturer who are now liable to be registered in GST. This subsection provides that the credit of eligible duties, that is excise duty, service tax, special additional duty, shall be allowed to be carried forward to such person, subject to the fulfillment of the following 5 conditions. First, inputs or goods are used or intended to be used for making taxable supplies under GST. ITC is admissible on such inputs under GST. Availability of invoices evidencing payment of duty. Invoices issued should not be earlier than 12 months prior to the appointed date. Supplier of services is not eligible for abatement under GST. So, if the credit is available on stocks held on the last day of the old laws, then case 1, invoice or other document evidencing the duty payment is available. Then in that case, full credit of excise duty charged on invoices would be allowed as CGST credit. In case the invoice or other document evidencing duty payment is not available, then what will happen in such a scenario? For this, a proviso has been inserted in this subsection, which says a registered person other than a manufacturer or a supplier of services, that is a trader, can claim such credit at the rate of 40% of the central or state tax applicable on supply of such goods within 6 tax periods from the appointed day, even though he is not in the possession of invoice evidencing payment of duty or tax, if he passes on the benefit of such credit by way of reduced prices to the recipient. This can be understood by studying the following table. In the existing regime, suppose the value of stock held is rupees 100, and this we add the excise duty paid of rupees 12.5 and add VAT paid of rupees 12.5. So the total value, the cost to the supplier is 125. Now in the GST regime, my net selling price is 200 for such goods. I would add CGST or SGST at 18%, that makes it 36. Now the total commercial value is 236. I have to subtract the eligible credit at the rate of 40% of the CGST or SGST, that is 36. That amounts to rupees 14.4. Therefore, my gross selling price for that particular product would be 221.6 rupees. Now, this proviso implies that a manufacturer or a provider of service cannot claim the benefit of reduced credit, cannot claim the benefit of provisional credit. A trader who has purchased from another trader would not be having any excise duty paid documents, so he can avail the credit equivalent to 40%. 40% credit would be available only to a trader or the first stage dealer or the registered importer. I hope I am clear to all of you. Now, moving over to the next provision, section 140 subsection 4, credit of eligible duties on supply of taxable or exempt goods or services. If a manufacturer or a supplier of services is engaged in the provision of taxable as well as exempted goods or services, then in respect of taxable goods or services, the SENVET credit carried forward in the return as per the provision of section 140 subsection 1, he can carry forward that balance. Now, in respect of exempted goods or services, the credit of inputs held in stock shall be carried forward as per the provisions of section 140 subsection 3. Now, coming over to the next provision, section 140 subsection 5, credit of inputs or input services received after the appointed date. This provision deals with the credit of duties or taxes in respect of inputs or input services which are received on or after the appointed day, but the tax or the duty has been paid before the appointed date. So, if in my example, the invoice is issued and the inputs are dispatched on 25 June 2017, but the same are received on July 5, 2017. So will I be eligible to claim this credit? Yes, I would be eligible to claim this credit provided the invoice is recorded in the books within 30 days from the appointed date, and this 30 days are further extendable to 30 days. So now what do you need to do to avail the credit of inputs or input services received during transit? First, you have to prepare the following information invoice wise and supplier wise and furnish it in a statement to be prescribed. First, the name of the supplier, serial number and the date of issue of invoice by the supplier or any document on the basis of which the credit of input tax was admissible under the existing law, the description, quantity and the value of goods or services, the amount of eligible taxes and the duties, or as the case may be, the value added tax or entry tax charged by the supplier in respect of the goods or services, the date on which the receipt of goods or services entered in the books of the accounts of the recipient. An important point to be noted here is the credit is allowed only for inputs and input services in transit. No credit is allowed for capital goods in transit. For example, a company has purchased capital goods on 29th May 2017 and they have received it on 2nd July 2017. Then will the company be eligible to claim the CENVET credit of capital goods in transit? No. The company will not be eligible to take the credit of the same in GST. Therefore, a company well needs to plan its purchase of capital goods in advance. Now next section, section 140 subsection 8. Credits carried forward in a return by a person having centralized registration. Conditions for the carry forward of credit. What are the conditions? Return has been filed within 3 months from the appointed day and the credit is admissible as input tax credit under GST. So what are the issues? What will happen if there is any revision of return? The law says in case a revised return is filed, then the amount that can be carried forward shall be of the return, original or revised, which is claimed as lesser carry forward credit that will be carried forward. Now, how will the credit be transferred? Credit can be carried forward to any taxable person having the same PAN in any proportion. Let us understand this with the help of an example. For example, the appointed day of GST is July 1, 2017. The original return was filed on 10 September 2017, claiming CENVET carry forward as rupees 2 lakh. Revised return was filed on 20th September 2017, claiming CENVET carry forward as rupees 2 lakh 50,000. Now, how will the carried forward CENVET be treated? Since both the returns are filed within 3 months from the appointed day, the credit can be carried forward. The credit of that return can be carried forward which has a lesser claim. That is, the CENVET credit of rupees 2 lakh can be carried forward. Let's take up another example. A person having centralized registration under service tax had operations in 3 states, Delhi, UP and Haryana, and had a credit carry forward of rupees 2 lakh. How and in what proportion the credit can be carried forward? The credit of 2 lakh can be transferred to any state, registration be it Delhi, UP or Haryana, and the transfer of credit can be made in any proportion. There is no limitation and restriction in this regard. I hope I am clear to all of you till now. Next subsection, section 140 subsection 9. Reclaim of credit already reversed. It says the CENVET credit of input services reversed under the earlier law for the non-payment of consideration can be reclaimed under the CGST Act subject to the condition that the payment for that supply has been made within a period of 3 months from the appointed day. This provision does not provide the further carry forward of such credit, and the same shall lapse if the payment is not made within the specified period. Next, the treatment of distribution of credit by ISD. The ISD shall be allowed to distribute the input tax credit on input services received by it before the appointed date under the GST Act, even if the invoice relating to such services is received on or after the appointed day. For example, the receipt of service by ISD is prior to GST. The receipt of invoice is also prior to GST. So whether credit could be distributed in GST regime? No, because credit would have already been distributed earlier. Second scenario, the receipt of service by ISD has taken place prior to GST. The invoice is received post GST. So now whether the credit can be distributed? Yes. The service is received by ISD. Third scenario, the service is received by ISD post GST. Invoice is also received prior to GST. Can the credit be distributed? No, because the service must be received prior to the appointed date. Last scenario, service received by ISD post GST, receipt of invoice post GST, whether the credit would be distributed in GST? Answer is yes. There is no time limit for invoices relating to the prior period. This implies that an ISD can distribute the credit even if the invoices are more than 12 months old. Now I have covered all the provisions relating to the issue of carry forward of credit. Now moving over to our next issue, that is job work. Section 141 deals with the provisions relating to job work. It says that if any inputs, semi-finished goods or finished goods are sent to a job worker for further processing, testing, repairing, etc., then in such cases no tax shall be payable by the person returning the goods, provided the goods are returned within 6 months by the job worker from the appointed day. This period is further extendable to 2 months. The manufacturer and the job worker both must declare such goods in the GST TRAN-1. So these two conditions need to be satisfied. If the goods are not returned, then the ITC availed by the manufacturer on inputs liable to be recovered under section 142 subsection 8 clause A. Let us understand this with the help of the examples. Case 1, the goods are returned within a period of 6 months or the extended period, no tax shall be payable. Case 2, not returned within a period of 6 months or the extended period. Then in this case, the input tax credit shall be recovered from the person who had removed such goods. Case 3, transferred directly within a period of 6 months or extended period. Goods can be transferred to another registered person on payment of GST, or goods can be exported out of India without the payment of taxes in accordance with the provisions of earlier law. So this summarizes the provisions in relation to job work. Next issue, treatment in case of revision of price. In case of any upward or downward revision of price is there, what are the conditions for the applicability of the provisions? First, the contract due to which the price is changed is entered prior to the appointed day. An invoice must have been issued prior to the appointed day. So, if there is any upward revision in price, if there is an increase in the price, then the person shall issue a supplementary invoice or debit note containing such particulars as may be prescribed. within 30 days of such price revision, and it will be deemed that such supplementary or invoice or debit note has been issued in respect of an outward supply. The buyer would be allowed the credit of such supply. What will happen if the invoice is not issued within 30 days? The law is silent. Next, if there is any downward revision in the price, it says if there is a decrease in the price, then the person shall issue a credit note containing such particulars as may be prescribed within a period of 30 days from such price revision. And it will be deemed that such supplementary invoice or credit note has been issued in respect of such outward supply. And the person would be allowed to reduce his tax liability only if the buyer reduces his input tax credit. Now, what if the buyer is an end consumer? Will I be able to reduce my tax liability? In my opinion, yes, you would be able to reduce your tax liability. Now, coming over to my next issue, treatment in the case of return of goods, sales return. Treatment of goods which are sold prior to the appointed day but are returned after the appointed day. What is the condition? The goods should not have been sold prior to 6 months from the appointed day. If suppose the appointed day is July 1, 2017, then the goods must have been sold on and from 1st of January 2017. Now we will understand this provision with the help of two case studies. Case 1, the tax was paid under the earlier law. Return of goods by a non-registered person. Treatment in the hands of the person returning the goods. It says no tax treatment since he is not covered under GST. Treatment in the hands of the person receiving the goods, that is the original seller. He would be allowed credit of the taxes paid earlier if the return is within 6 months from the appointed day. He will also be liable to pay tax under section 9 subsection 4 as supplies from unregistered person. Second, in case of return of goods by a registered person, he will charge GST on the return of the goods. Now, what is the treatment in the hands of the person receiving the goods? He will not be allowed refund of the earlier taxes, but he will get credit of the taxes charged to him under GST. Let us understand this with the help of an example. For example, a dealer sold goods worth rupees 50,000 on April 1, 2017, assuming that the VAT rate applicable on such goods is 10%. Therefore, the amount of VAT paid is 5,000. Now, these goods are returned on 1st August 2017 by case A, a non-registered person. No tax shall be payable in the hands of the person returning the goods. And what will be the treatment in the hands of the person receiving the goods? He will be allowed refund of rupees 5,000. Also, rupees 9,000 to be paid on reverse charge due to applicability of section 9 subsection 4. Case B, if the goods are returned by a registered person. In this scenario, the registered person will charge GST of rupees 9,000 while returning. No refund of the original taxes in the hands of the person receiving the goods. He will get the credit of rupees 9,000 charged by the person returning the goods. Case 2, tax was not paid under the earlier law but taxable in GST. In this scenario, if the goods are returned by a non-registered person, then no tax treatment in the hands of the person returning the goods since he is not covered under GST. And what will be the tax treatment in the hands of the person receiving the goods? No question of refund of taxes arises as no taxes were paid earlier. Second, he will also be liable to pay tax under Section 9 subsection 4, that is reverse charge, as supplies received from an unregistered person. Now what if the goods are returned by a registered person? What will be the treatment in the hands of the person returning the goods? He will charge GST on the return of goods, since goods are taxable in GST. Now what will be the treatment in the hands of the person receiving the goods? No question of refund of earlier taxes shall arise. He will get credit of the taxes charged by him under GST. Now, coming over to my next issue, status of litigations, refunds, etc. relating to the earlier law. Section 142, subsection 3, 4 and 5, refund process under the GST regime. Where the refund claimed is filed before, on or after the appointed day for any amount of Senvet credit, duty, tax, interest or any other amount paid, and in respect of goods or services exported, the refund shall be made of the duty or tax paid, and in respect of services not provided, the refund shall be paid of the tax paid only. What are the conditions? The amount of refund will be paid in cash. No amount of credit is carried forward under GST, and the refund claim, if rejected fully or partially, shall lapse. Section 142, subsection 6, 7, 8 and 9, appeal or review. Every appeal, review or reference relating to the claim or recovery of Senvet credit or output tax liability initiated under the existing law at any time will be disposed of as per the provisions of the existing law, provided the same does not amount to unjust enrichment. Assessment or adjudication, same provisions. The assessment or adjudication shall be disposed of in accordance with the provisions of the existing law. Revision of return, where any return is revised after the appointed day within the prescribed time limit under the existing law, any amount, if found to be recoverable or refundable, will be recovered as per the provisions of existing law. I hope I am clear. Now, moving over to my next issue, treatment of transactions overlapping in two regimes, where the goods or services or both supplied on or after the appointed day in pursuance of a contract entered prior to the appointed day, then they shall be liable to tax under the provisions of this Act. For example, if a contract is entered into on 1st April 2017, appointed day is presumed to be July 1, 2017, supply is made on 1st August 2017, whether GST is to be charged on such supply. In the given case, supply is made on 1st August 2017, so this supply would be subjected to GST even if the contract in pursuance of such supply is made prior to the GST. Section 142 subsection 11, it says, notwithstanding anything contained in section 12 of the CGST Act, that is point of taxation, no tax shall be payable on goods to the extent the tax was leviable on the said goods under the VAT Act. Clause B, notwithstanding anything contained in section 13 of the CGST Act, point of taxation, time of supply in the case of supply of services, no tax shall be payable on services to the extent the tax was leviable on the said services under Chapter 5 of the Finance Act 1994. Clause C, where tax was paid on any supply both under VAT and service tax, composite contracts, AMCs, tax shall be levied under this Act to the extent of supplies made after the appointed day. Taxable person would be allowed to take the credit of VAT or service tax, and the amount of credit would be calculated in such manner as may be prescribed. So let us understand this with the help of an example. Mr. C, a chartered accountant, entered into a contract on 1st June 2017 for post-GST implementation support. Entire amount was received in advance on 10th of June 2017. Supply was to be made from July for a period of 1 year. Appointed day is July 1. Now what will be the treatment of this transaction? Section 142 subsection 10 is applicable on the said transaction. It says the tax on said transaction would be liable to GST even if the contract in respect of such transaction is entered into prior to the appointed day, but the tax on said transaction would already have been paid under the service tax laws at the time of the receipt of payment. So whether there would be a double taxation? No, because according to section 142 subsection 11 clause B, it says no tax shall be payable on services if the tax on it has been paid according to the provisions of Chapter 5 of the Finance Act 1994. So in this scenario, GST would not be applicable in respect of the provision of the service post the appointed day. I hope I am clear. Now, there are some other issues also. For example, goods sent on approval basis, returned on or after the appointed day. Section 142 subsection 12. This provision is applicable if the goods were sold on approval basis and the goods were sent not earlier than 6 months from the appointed day. So what will be the tax treatment in the hands of the person returning the goods? No tax is payable on return if any of the following condition is fulfilled. Goods are returned within a period of 6 months or such extended period from the appointed day. Goods returned are exempted from tax under the GST Act, or the goods are returned by a person who is a non-taxable person. So tax would be payable if the return is made after 6 months and the goods are returned by a taxable person. Treatment in the hands of the original supplier. Tax shall be payable by the original supplier if the goods are not returned within the period of 6 months or the extended period. I hope I am clear with this provision. Now moving over to the next provision. Deduction of tax at source. Section 142 subsection 13. It covers cases where the sale of goods takes place before the appointed day. Sale was covered under the provision of tax deduction at source under the earlier law. Invoice for the sale was issued prior to the appointed day. If all the above conditions are satisfied, then no tax at source would be deducted under the GST Act. So this covers up all the provisions relating to the transitional provisions. But there are certain other key concerns as well which the company needs to keep in mind. First, proper classification of goods and services under the GST law to avoid classification issues. IT software will have to be customized. The taxable person has to be conscientious regarding compliance of the anti-profiteering clause during any revision in the prices. Restructuring of the existing warehouses of the company to examine if the benefits of such warehouses would still accrue. Recalculation of the working capital due to changes in the rates of taxability of certain transactions like self-supply under the GST regime. So a company must keep in mind these key concerns and the preparedness and the things that it is required to do before migrating from the existing law to the new law. I hope you all found the content useful. In case if you have any queries, you can send in the same at my email ID, that is cakamakshikhandelwal@gmail.com. Thank you.